We have the Feb MF data that has come in as well. 29,240 crores versus 39,000 crores in terms of an inflow. So the inflow month on month for February has reduced, though we'll look at more details out there. The net equity inflow perhaps could have been lower on account of a couple of factors. One, there might not have been as many offers openings. And secondly, there could have been some redemption. So we'll keep an eye out on further detail that comes in here. Feb MF data is what we have right now. Net equity inflow at 29,241 crores. Sudarshan, we'll look at this data in just a bit. But in the meanwhile, do tell us a little about Tata Motors. Okay, we'll get back to Sudarshan in just a bit. But that's the data that we have right now. February mutual fund data, 29,241 crores.
It'll be interesting to see what the SIP number comes out with, because even after the correction that we have seen from the highs, the SIP number has remained largely resilient. The large cap fund inflow still almost the same as it was in the previous month, around 2,800 crores compared to an inflow of 3,000 crores last month. Now, the consensus building up that large caps are the place to be as of now, and that is why you can see the flows on the large cap side still being fairly okay on a month-on-month basis, but the overall inflow number has seen a substantial downtick compared to the last month. Of course, there were a lesser number of NFOs if you could attribute it to that, and of course the market correction playing a big role in that as well. The small cap fund inflow at 3,700 crores compared to 5,700 crores last month, so a big downtick there of around 2,000 crores, and the mid cap fund inflow too seeing at least around about a 1,700 crore downtick from last month at around 3,400 crore rupees from 5,100 crores last month. We'll get more insights on this as the guests and experts join us on this. But as of now,
Sandeep Bagla with us. Sandeep, what explains this, difference in the numbers that we've seen? If you look at the last 4 months, the average has been close to around 38,000 crores on a monthly basis. In February, it's come down to sub 30,000 crores. What do you think explains this? Is it the weakness that we saw in the market, the lack of new fund offers, or, is there anything else that you think has happened?
No, I completely agree with you. Your analysis is correct. So the flow has somewhat decreased in the new fund offerings. So anecdotally, what we were hearing, that there's a considerable slowdown in terms of bulk money which is coming through the NFOs, and number of NFOs have also sort of reduced. So investors will be guided by the immediate past experience of the NFOs and of the markets. So it's quite natural that, while it is heartening to see that the inflows are quite strong, 30,000 crores is not a small number. So it is quite good to see that the numbers are quite strong, but the trend would weaken a little. So that is all right. I think what we need to focus is that the money flow is positive and it's quite substantial. And depending on the market and with the confidence coming back, I think we will see these numbers grow gradually.
One of the more volatile numbers is actually the liquid fund number, which has fallen from 91,000 crores to about 4,900 crores. My sense is that this 91,000 crores itself was an aberration, and as a result of which this 4,900 crores also is a bit of an aberration. So do you have any thoughts on this? The liquid fund inflow, which has come in just sub 5,000 crores versus 91,500 crores month on month?
Yes, so liquidity has been extremely tight on a couple of counts. So liquidity is, has been uniformly, consistently in the deficit to the extent of 1.5 to 2 lakh crores. While the rate has been cut, the liquidity has not flown into the system yet. And I think government is also, wants to keep the fiscal deficit down for the year and has been deferring payments. So I think in April, liquidity will improve. And that is when we will see, better numbers for liquid funds, because local liquidity is tight, right?
All right. And what would your sense on the SIP number be? Because it's been holding closer to that $3 billion per month sort of mark over the last couple of months. But what's worrying is the increasing trend of withdrawals in SIPs as well. Where do you think that number settles this month at least?
So, I think the mutual fund industry and the distributors, the MFDs have done a fantastic job in terms of taking the message of mutual fund sahi hai to the masses. And people are putting recurring deposit kind of investments like SIPs, and that is really growing. I think these numbers will continue to grow on a trend basis. And I think few people who have started this habit in the recent times might experience some volatility and might get, second thoughts about it. But I think the distributors are doing a great job, and I think the mutual fund industry is doing a great job in terms of reassuring and re-emphasizing that we are here for the long run. So one should not get influenced by the short-term volatility. The markets are correcting from extreme optimism scenarios to realistic scenarios. So I think there will be volatility, but I think we will tide over it. I think the numbers will settle down in the short run around these numbers and gradually grow going forward.
Right. Sandeep, the large cap fund inflow has remained pretty resilient so far, even on a month-on-month basis, but you can't say the same for the mid cap and the small cap fund. Do you see this now becoming a sustainable trend, as there is some consensus building that, okay, large caps is the place to be and mid caps and small caps might just see some more pain going forward?
Yes, see, so what has happened is that, what we were initially, when we are investing in small caps or mid caps, we are giving more weightage to longer term growth. Now, those are not a clear and current reality that is in the future. I think the market mood has shifted, that more money is getting allocated to current cash flows and current earnings. So yes, this trend is there, but one single swallow does not make a summer.
Right.
So I don't think this trend is going to last for very long. The current volatility has given rise to a situation where we are allocating more money to large caps, and this is happening across fund managers and investors and distributors. I think once the situation settles down, we will come, the flows in small caps and mid caps will start.
All right, Sandeep, just one last question before we let you go. You've been around for a while. You've been tracking this, and you've seen markets through cycles. A lot of people say that flows keep markets resilient. The counterintuitive thought is that markets keep flows resilient, because if the market continues to do well, flows keep coming in. It's been 6 months of underperformance of the market itself, negative returns for the frontline index itself, and a lot more for the mid and small cap indices. For how long do you think the market has to be this way for flows to actually, take a leg down or maybe not grow as fast as we've seen earlier itself? Just wanted your thoughts on how it goes.
I will answer that. See, people make the mistake of putting the cart before the horse. The horse has to lead the cart. The economy has to grow, because of which companies will do well, because of which earnings will do well, because of which flows will come. So flows are not coming because the growth aspect is slowing down. So once the growth and the visibility in earnings will come, and before they come, maybe probably markets will try to, to preclude, focus that possibility and build that earlier before the flows actually happen, before the earnings actually grow. So flows will come when valuations are a little better and earnings improve, when the visibility on earnings improve.
All right, Sandeep, thank you so much for sparing time and joining us today. Looking forward to chatting with you more often on this platform. Got some interesting insights coming in with the large cap flows being resilient, the mid cap and small cap flows seeing some outflow, and you can saw the sectoral and thematic funds number just flashing on your screen as well, lower on a month-on-month basis. We also being joined by Anand Vardarajan, who is the Chief Business Officer of Tata Asset Management. Anand, good afternoon. Thank you for joining in. What do you make of this, right? With these large, firstly on the total inflow, you attribute that to the correction in the market as well, and of course with the resilience in the large caps and the decline seen in the inflows by the small and mid cap funds?
So I really think the way to think about this is 1 year returns of mid and small turned negative sometime in Jan and Feb, and that could have had a bearing on flows consequently in these categories. Large cap, for instance, I think turned negative 1 year, would have turned negative very recently. End of Feb, I think large caps would have turned negative. But I think there has been a lot of commentary which has been on, which has been saying that large caps on a relative basis look attractive. And not surprisingly, we've seen better inflows in large cap compared to its own past. but small and mid languishing relative to its past because of, I think, performance pressure.
All right, we take that point, Anand. You know, we had a fair bit of discussion on this itself. Just a final word on SIP. What would you hazard that number would be as a guess? 26,000 is what we've been doing for the last 3 months. Do you think this is going to come down or maybe stick around at these levels itself?
My sense is that it could possibly kind of see a bit of softening in February. Let's wait for the numbers to be out. But if at all there is anything, the same, I would attribute the same reason if it is any softer, because I think 1 year returns of SIP could look very, very soft to even potentially negative. So if investor sentiments could wane, then maybe that could seem a bit muted. Suffice to say that, of course, these are then times to kind of bump up or increase. But clearly, I think, if you were to look at the past returns, and investors often look at that as a decision point for making future investments. But I think we often keep saying this in our to our clients that as markets rise, it only your risk increases, and as markets fall, your risk decreases. This is something which is very simple but not easy to digest and action upon.
Right.
And that behavior comes across sometimes in flows.
All right, Anand, thank you so much for joining in.
And if you were to look at it in mid and small last year, I think
we've got him on a scratchy line, but we've got his point. Anand, thank you so much for joining in and giving us your views. We will obviously connect with a battery of experts once we get the SIP number that comes in as well, and more details as the Association of Mutual Fund Industry, the AMFI as we know it, will do a conference call with everyone and give us some more details of the flows that were in February. Take a short break, come back. On the other side, an important corporate conversation lined up for you. Management of Supreme Industries joins in to discuss the acquisition that they've made very recently.